$8.7 billion in net dealer gamma. Massive positive dealer positioning stands between the tape and a structural breakout. This is the Gamma Brief. Monday, April 27th, 7 a.m. Eastern, ES futures are trading at 7,192. Friday's call nailed the 7,000 put wall hold, though the trend ultimately breached the 7,150 ceiling to close out the week. If geopolitical headlines stabilize, then the positive gamma regime clamps down on this gap higher. We opened the week in a positive gamma regime backed by $8.7 billion in net positive gamma. In this environment, dealers are positioned to sell into rallies and buy into dips, creating mechanical friction against directional trends. However, the GEX flip sits at 7,200. With ES currently near 7,192, we are operating in a borderline regime just 8 points below the flip. VIX is elevated at 18.98, signaling structural tension despite the anticipated dampening flows. The call wall rests right at the 7,200 flip, while the put wall is anchored far below at 7,000. ES sits 192 points above the put wall, but just 8 points from the call wall. If the gap fades, the floor reprices to 165. The 86-point expected move reaches up to 7,278, mathematically projecting a test and potential breach of the 7,200 call wall. ES futures have already cleared R1 at 7,155. First active resistance is now R2 at 7,202. Overnight, US-Iran de-escalation hopes drove a broad risk-on bid, fueled by reports of proposals to reopen the Strait of Hormuz. However, conflicting headlines regarding halted diplomatic talks present immediate binary risk to this morning's narrative. In cross-asset action, the 10-year yield eased 3 basis points to 4.31%, while sector leadership is mixed, with utilities up 1.6%, but industrials dropping 1%. At 10 a.m. Eastern, the Dallas Fed Manufacturing Index drops. A severe miss tests durability of the current geopolitical gap, while a beat likely pressures ES straight into the 7,200 dealer ceiling. The environment is consistent with patient-based fades of extreme moves. It is hostile to aggressive directional trend following at the upper bound. A sustained breach above 7,200 flips the dealer hedging dynamic entirely. The primary playbook targets a rally into resistance if price holds above the 7,155 trigger, capturing the narrow gap to the 7,200 call wall. If price fails to hold 7,155, the alternative plan favors a controlled pullback toward 7,054. Income structures are mechanically supported in this positive gamma Let's try that again. Income structures are mechanically supported in this positive gamma environment, but sizing must respect the extreme proximity to the regime flip. We open in positive gamma but pin precariously close to the transition level. A confirmed break of 7,200 forces dealers to chase, rewriting the mean reversion thesis. The regime is range-bound, but vol is elevated. Size down, let it come to you. Level set, bias defined. Good luck out there. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk, manage your size, and trade your own plan.